So, welcome to this Centre for Digital Development seminar given by Professor M.N. Ravishankar of Loughborough University on, as the title suggests there, Prosocial P2P lending platforms and the fight against poverty. Ravi, please take it away.
Thanks, Richard. Thanks, everyone, for watching. This is a project we started a few years ago, and by we, I mean myself and my ex-colleague Silvia Masiero, who is now at the University of Oslo in Norway. And one of the motivations for this project was us thinking about what roles do digital innovations and technologies play in helping people get access to credit. And we were looking at a number of projects, particularly around lending and microfinance, that seem to be using new technologies to help people access loans. So that was the initial motivation. And then we started hearing about this organization called Runday in the press. And this organization that was operating out of India seemed to be doing very well in terms of using technological innovations to try and help excluded and marginalized communities access capital at low interest rates. So this was the initial motivation for us to think about starting a project. And we met with the founders of this organization a couple of times in London. And then Sylvia went to Bangalore in India and did a few rounds of fieldwork. And then I went there and did a few rounds of fieldwork. And the result of that is this project and this paper, which came out earlier this year in a journal called Information Systems Journal. So I will talk a little bit about what the project is and what the organization does, and how, in my view, prosocial P2P lending, peer-to-peer lending, can influence the fight against poverty. So that's the whole project, and I'll say a few things about our research questions, etc. But feel free to stop me if you have any questions, or if you want to know something in particular, or if I've said something controversial that you want to interrupt. When we think of peer-to-peer lending and online peer-to-peer lending, some of you may be familiar with organizations like Zopa in the UK or Lending Club in the US, and PPDI. Hello?
Sure, just go ahead.
And PPDI in China. So these are some of the well-known platforms. And what they essentially do is they help lend and borrow money without the intermediation of traditional financial institutions. So in other words, what happens with these lending platforms is that all the lending happens online, and people are able to go online, lend money, and there are on the demand side, the people borrowing money can access money online as well. So where does Prosocial come in? Only in recent years we've seen a small number of such platforms start thinking about using innovative digital technologies innovatively to address grander challenges. And one of the organizations that most people talk about is KIVA, and I'm not sure if some of you are familiar with KIVA. So KIVA has been seen as one of the more impressive prosocial peer-to-peer lending platforms. And one of the interesting things that we started thinking about as we initially talked to the founders of this organization was to see how they operated. And it occurred to us that there was a very strong hybrid orientation. And by hybridity, we mean a mixture, a blending of different things here. And the two things that we thought about that was quite obvious to us was the distinction between the kind of online work the organization did and the kind of offline work it did. By online work, we refer to the supply side of operations. And here we are talking about how the organization generated and maintained its supply of lenders. And that required having sophisticated digital infrastructures, making sure that the website worked, and that part of the story. And then offline work here refers to how they reached out to borrowers, particularly low-income groups and financially excluded communities who are the focus of this particular initiative, who are unlikely to have access to high-speed internet, or they may not even be digitally literate enough to engage with these kinds of platforms. So that there is a very clear there's a very clear online side to the work of Runday, and equally there's a very clear offline side to it. And the offline work involves reaching out to borrowers who may not have access to the internet. And when we talk about the success of the social dimension, we could argue that really, if we want to look at whether such platforms, pro-social lending platforms, are successful, then we have to see whether there is significant engagement with digitally excluded low-income borrower communities. So the success of the social dimension is linked to engagement with and work with excluded borrowers. So hence we can think of a very interesting research question: how do these pro-social P2P lending platforms enact their hybrid orientation? And that was basically the focus of our work. Can you still see my screen, Richard? Something's just
all good.
Okay. So this was the plan, and most lending platforms happen to be pure commercial ventures like Lending Club or Zopa that I just mentioned, and they may not have a very explicit focus on grander social challenges. And by contrast, an organization that has a pure pro-social venture can be seen as an instantiation of what you might call a digital social innovation, where the operating model has a very strong focus on digital technologies, but the overarching focus is also on the social aspect of this innovation. So what pro-social P2P platforms do, and there are a few of them, is they identify borrowers from low-income backgrounds, low-income households, and they build an online profile for these low-income borrowers. And then they make it possible for people who may want to lend money to lend money through a digital transaction on the internet, through a credit card or a debit card, or even transferring money through a bank account. And the basic idea here is that the basic idea is to make it possible to lend money on the internet through a digital transaction. And through this process, the idea is that the poor and excluded communities in different parts of the world can access relatively small loans, and we are not talking about very big sized loans. And that's the whole idea. And when we talk of hybridity and hybrid orientation, and a little bit of theoretical background is probably needed here, I think we could think that most retail organizations do have an online and offline focus. And of course, for pro-social P2P lending platforms, hybridity is a really core facet of the social mission, in the sense that if they want to harness the reach of the internet, and so they want to harness the reach of the internet, but also to fight poverty. So which is why my argument is that the main purpose of the online channel is the generation and maintenance of a steady supply of lenders, whereas the main purpose of offline activity is probably to engage very closely with low-income borrowers. And that was that's the context in which we started thinking about hybridity, and how P2P, pro-social P2P lending platforms may enact their hybrid orientation. Maybe we thought was a very interesting sort of an area to look at, which was driven by some of the initial work we did with Runday and what we started seeing there. And oops. Sorry, Richard, it's giving me multiple problems here. Are you still there?
Sure.
Oops. Um, Runday is a interesting organization, and some of you may take the opportunity to look up Runday on the website. It's got a very interesting website, and its operations are very clear. It facilitates delivery of unsecured loans. These are not loans that are secure, and to low-income individuals and micro ventures through its online platform, runday.in. It operates out of Bangalore, India. And as I said, the key idea here is that it establishes a virtual connection between lenders and low-income borrowers. And there is a particular focus here on rural India. And what is interesting is that when it started operations, it started as almost as a not-for-profit, in fact, as a not-for-profit organization. And over a period of time, the regulatory environment in the Indian context changed, and it is now operating as what's called as a non-banking finance corporation, or NBFC. So it's a peer-to-peer lending organization, but it is transformed from being a not-for-profit entity to a for-profit entity. And what you see on the Runday website, if you go there and take a close look, is you see a number of borrowers' profiles. You also see demographic data about the borrowers and the purpose of these loans. So why someone needs a loan, and what is it that they want to do with the loan. So we can also so there is a focus both on individuals as well as very small businesses. You may call them micro businesses or micro ventures. And of course, one of the attractions here of bringing in the digital innovation and using digital technologies is that the interest rates can be brought down significantly. So they promise lower interest rates. And of course, it's interesting that when you're operating as a not-for-profit, you can lower the interest rates even more because you're relying on donations. Whereas once you become a for-profit organization, the dynamics change a little bit. So what we have noticed even with this organization is that the rates of interest have increased a little bit, but it is still very competitive and lower compared to that particular market, compared to what is typically offered in that market. And some of the figures you see on the slides are a little bit out of date. They may have more lenders now. This data is about 6 months old. So the operations are nothing earth-shattering. They have not done, the scale is not tremendous, but they have about 15,000 lenders who have given away loans approximately around 9.5 million pounds to more than 70,000 borrowers in 18 or 19 provinces or states in India. So in that particular context, you could argue that this is a significant amount of credit to people who need them very badly, who may have very limited access to typical financial channels. And Runday works with intermediaries. As some of you are familiar, it's very hard for a pure digital organization to actually be able, especially if it's a small organization, to be actually able to contact every single borrower and keep in touch with them. So they works with intermediaries, and this is a typical innovation when you try and work with low-income borrowers. You often need the help of intermediaries or local expertise to try and reach the borrowers. And they work with intermediaries who are typically non-governmental organizations. They call them impact partners, which is a more grand definition of the intermediaries. And the intermediaries help identify the borrowers and they facilitate application for a Runday loan. So it's quite often the case, and in fact, in most cases, the borrowers have absolutely no idea about Runday, the platform. They are more often than not dealing with intermediaries, but of course, over a period of time, Runday has also built its presence in the borrower community. Borrowers repay monthly, and the loans are for various purposes. Could be for a small business, for education, for agriculture, the typical things that a low-income community struggles with, and the typical problems that people have with cash flow and the limited opportunities that they have to access loans are being met by this organization. And a significant number of the borrowers are women. And in fact, probably I'd say more than 85% when we looked at it last time. And the repayment rate is excellent, given that there's no collateral and the loans are unsecured. More than 95%, the 95% repayment rate is a pretty big one. In terms of what we did there, we did 48 interviews, but we also hung around quite a bit. We've been going there quite regularly in the last 3 or 4 years. So from a methodological point of view, it's not quite ethnography, but a lot of the elements of ethnographic work have been used in this project when we went and did our field work at Runday. I'll go quickly to what we found, and this is both the structure of our data as well as it's a way in which you could tell the story of Runday. We identified 2 categories of action, or if you will, 2 clusters of action, one called digital work and one you may refer to as field work. So what we are arguing is that the hybrid enactment is possible through 2 clusters of action. One cluster of action we call digital work, and another cluster of action we call field work. So digital work, as the name suggests, is that which focuses on the online activities, the internet-based clusters of action. And there we argue that Runday does three kinds of activities. One we call digital attention building. And this, if you go to the Runday website and look carefully, you will see that there's a very vivid use of photos and images, and it is quite distinctive. It's a pretty bland thing to say when you say you're using photos and videos, but one thing that makes an organization, a prosocial P2P lender like Runday, stand out is actually the way the visual aesthetics are on its web platform. And they use social media quite regularly, quite frequently, and in innovative ways. And that is something that we found was central to the activity that we label digital attention building. And there is a very clear and transparent way in which they use the social media channels and the platform to illustrate the loan repayment model. And here the loan repayment model is actually being illustrated mostly for the benefit of the lender community rather than for borrowers. And the argument here is there's so much going on for the prospective lender community in their own life that it's almost impossible these days to capture anybody's attention for any small startup online. So digital attention building is the sort of is a key action that is at the core of digital work, and we feel is central to one part of the hybrid enactment. And a second cluster of action that we found and we felt is really important for prosocial lending platforms is credibility building. And without building this credibility, we feel that it's very hard to scale and sustain operations, particularly when a platform has a very prosocial component in the financial services space. So transparency and detailing of the operations is at a fairly sophisticated level with this organization. And you can see that in the way the accounts, the audited accounts and the impact stories are documented. It's transparent, it's quite vivid, and that helps build credibility, and the fact that it's quite regularly updated and that the team looks after it quite closely. So a second set of actions we label digital credibility building. And the third set of actions, which sometimes can be controversial in the literature, is empathy building. Can you actually build empathy online? And so one of the things that Runday has done very well is to very faithfully, without being over dramatic, represent the life struggles of the borrowers and the life experiences of the prospective borrowers as well as their current borrowers. And very sensitive and empathetic portrayals of stories from the field where people have struggled, and particularly when the stories involve women, when stories involve hardships, and how someone from, say, a very remote background without any access to typical financial institutions is only struggling for perhaps a few £100 makes for a really good story. And it's just that they don't, such a person will not have access to the usual markets that most people have. And then the online channel, the Runday channel, therefore is able to match this person with a prospective lender who could be in a large city, for instance, or usually that is the case. So the three theoretical categories that we think are central to digital work, which is one dimension of hybrid enactment, are attention building, credibility building, and empathy building. And of course, the most important thing from our perspective is that this is happening digitally. It's not which makes it interesting interesting for us to think about conceptually as well. Can attention building, empathy building, and credibility building happen digitally? And is that even a possibility, particularly for a financial services firm? And we find that this seems to be at the heart of Runday's success. And one of the challenges for a lot of lending platforms, the more commercial ones, is not so much a challenge. They don't bother about the life experiences, or they're not really that closely connected to the borrower community. For them, the borrowers are also accessible on the platform. And so therefore the demand side is also constructed in a way that is focused on the digitally literate for borrowers who can easily access the internet. In contrast, I think for an organization like Runday, the key challenge is to work with borrowers and to access borrower communities who are outside the mainstream, who may not have access to the internet at all, or who may not be digitally literate in any case. So therefore, a second dimension or the contrast, or when we talk of hybridity, what comes with the online work is the serious offline work, which we label field work. And intermediaries are obviously the heart of Runday's operations, because Runday finds it very hard, as any organization will, to access borrowers directly. So intermediaries usually do a lot of work with local communities, and they'd have a presence in, say, social work or healthcare or local education and in areas like that. So intermediary relationship building is an activity that Runday has taken very seriously. And that is, to us, a key element of the social aspect of prosocial P2P lending. And the way this is manifested in this particular organization is that Runday has very strong relationships. It's not a hands-off relationship with the impact partners or the intermediary organizations. So there are dedicated teams within Runday who go and establish and build relationships with the impact partners and the intermediary organizations. And there is a lot of accounting work and auditing work that goes on with these collaborators to ensure that there is a positive impact, or to document the impact of loans, and to ensure that the loans are being dispersed on time and being used for the purposes they were disbursed for. So intermediary relationship building is not something Runday has left to somebody else to do. The organization does it on its own, and that of course has its own challenges. And a second dimension of field work is the borrower relationship building. So there's been a long tradition within the organization of conducting interviews and surveys with borrowers, trying to document the improvements in their life chances, and what do people do with the loans, and how does that have a positive impact on their life? What do they spend it on? Do they spend it on, for instance, children's education? Do they spend it on something else? So how does the loan have a positive impact on the life of the borrowers and their immediate family members? Is being tracked longitudinally, and the organization is taking pains to do it. So this part of working closely with borrowers is something that Runday does, and we class this action as field work. And there are, of course, parallels with the typical microfinance model, which some of you are familiar with. But of course, here, traditional financial institutions like banks are not involved in peer-to-peer lending, one. And there is a lot more freedom for the borrowers to choose the kind of loans they want and the amount of loans they want. And of course, there's a very strong online component, which is at the core of the business model here. So there are parallels with the typical microfinance model, but I would argue that there are significant differences as well. So we broadly argue that there are two categories or two clusters of action that are at the heart of the hybrid enactment: the digital work, which focuses on the supply side, and the field work that focuses on the demand side. So hybrid focus is maintained, we would argue, through digital work, which comprises online actions or internet-based actions, and field work, which comprises or comprising field-based actions. So these are the two categories of actions that are at the heart of the hybrid enactment, which is one of the main arguments in the paper. And if we go back to the literature, the hybridity literature, which talks about how organizations manage hybridity, there are a lot of references to approaches like integration. So one of the ways of blending is to bring together different aspects of the hybrid components. So in our case, what we've argued in the paper is that the portrayals of the field workers' struggle is brought directly onto the website. So there's a little bit of integration of what is happening in the offline world with their presentation and with their self-presentation in the online space. So there are shades of what the literature would refer to as an integration approach. Equally, there are references to what we might call compartmentalization, which is the borrower communities or the people on the ground who are at the receiving end of these loans, who receive these loans, have almost no idea of the digital identity of the organization, and it's almost irrelevant. So the digital identity is kept separate from the identity that the lender maintains on the field. And this strategy is sometimes referred to in the literature, or we think it is referred to in the literature as compartmentalization strategy. What I forgot to mention, which is there in the data structure that I just showed, is a forward-looking or a more innovative approach to the disbursement of loans, where you bring in a layer of disintermediation. In other words, can we stop relying on the intermediaries or so-called impact partners, and can we reach the borrowers directly? And this is a much more ambitious approach that the organization is taking, we found, where they're trying to establish electronic kiosks in rural parts of the country and introduce digital literacy modules for borrowers, and to try and enable the borrowers to access loans directly without the intermediation, which is an interesting innovation. But how it can be scaled is a very interesting problem that requires a lot of thinking. And given the complexity of countries like India, I think it might be very hard to implement in the short run. But on the positive hand, I think some of you will be familiar with the tremendous technological infrastructure the technological infrastructure has improved in India so much in the last few years with what is sometimes called as the jam trinity, Jandan, Aadhaar, and mobile technologies, that it is very possible with advanced biometric identification systems to actually enable direct disbursement of loans. And this is something that we saw towards the latter part of our field trips and data collection. But I think it might be more complicated to implement than we think. So if you want to connect some of the approaches to hybridity that we are seeing at Runday with the literature, we would say that there are elements of compartmentalization, there are elements of integration, where some of the work with integration, what I referred to, in case it wasn't clear earlier, was elements of the offline work, the taking of the photos, the sensitive depictions are all brought back to the online space, to the platforms. And to that extent, there is some element of integration going on. And there are new creative approaches, novel approaches, where where there is an effort to try and reach borrowers directly. And this leads us nicely to think about what are some of the implications of this work. What do we find that is interesting theoretically? What do we find that is interesting practically? Are there any controversial elements of these types of prosocial P2P lending models that we can think about, both for research purposes as well as for trying to make a difference to policy. Broadly, I think there are 5 implications which are more theoretically oriented. We see with prosocial P2P lending platforms that there are a medley of hybrid practices. It isn't just one particular hybrid practice. So there is a combination of, there's a different kinds of hybrid approaches. There's a compartmentalization approach, there's an integration approach, and some novel approaches. So we've argued in the paper that prosocial P2P lending platforms have a medley of hybrid practices. And what is very interesting with the digital work we think is that what we are seeing is for successful operations of a business model like this, embedding or packing both transparency and emotion in the digital into the digital work is a very central component of prosocial P2P lending platforms. I think the number of platforms and number of digital spaces do emotion very well. They may not be willing to do transparency. And quite often we see organizations hiding behind AI models which are hard to explain. So there are lots of black boxes which are left unopened, and consumers are simply being told that trust us, this is a fair system. And in contrast, what we see with an organization like Runday is that there's a very clear effort to have both transparency as well as emotion in the digital work. And this seems to be central to both the sustainability and the scalability of a business model that has a very clear social angle, but also in a broader for-profit environment. Needless to say, as I've referred to already, the work of prosocial platforms seem to be both enabled as well as constrained by the people or the organizations in the middle, the so-called intermediaries. And this is well known in the literature that for organizations to be able to reach to the poorest, they often have to work with intermediary organizations. Total disintermediation may not be possible, and in many cases it may not even be advisable. So it is interesting. It's an interesting theoretical observation that the fight against poverty using digital technology seem to be, on the one hand, enabled very much by the presence of intermediaries, but equally they seem to be constrained by intermediaries. And what we also would argue that is that the supply side digital infrastructure is an absolute key enabler which allows the access to loans. And we are seeing that not just in the case of Runday, but more generally in other lending platforms as well. But for prosocial platforms, the higher the sophistication levels, the greater the possibility that the loans will reach the borrower communities that the organization wants to reach. And a final comment about prosocial lending platforms, but also more generally with social innovations, is the choice that organizations and entrepreneurs have, particularly digital entrepreneurs, between committing to depth and investing in breadth of social impact. And the more the focus on depth, the less opportunities for organizations to go broad. And if the organization wants to focus on depth, then the number of activities that they get drawn into might actually stop them from scaling or come in the way of scaling. But these activities may be very, very crucial to ensure that the model is working. And therefore, this challenge between breadth and depth, we see that in other cases as well, where there's a constant push towards transferability of particular development projects and the need for RCTs to show that things actually work, and how do we scale to a much larger context? Can we see impact in a much broader sense? And small startups in the digital space, particularly in the digital social space, struggle to make this choice as far as I have seen, between committing to breadth, which is often what the investors and the companies that trust and the companies putting in money want. They want to see the breadth. And that always comes at a cost of depth. So this is a constant struggle for digital entrepreneurs. And so we would argue that the choice between a commitment to depth and investments in breadth is at the heart of prosocial lending platforms. From a more practical point of view, our experience of Runday leads us to comment on some elements of what such enterprises, not just lending platforms, but more broadly, digital social innovators can or should do. It's perhaps important for senior management teams to have a diverse set of experiences, and the digital focus sometimes leads entrepreneurs to focus on particular skill sets and ignore some areas that are fundamental to field work and fundamental to assessing the social impact. So coming together of or having these complementary skill sets within senior management teams may be very important to have the social impact clearly documented and to have some control over the social side of operations. And these digital enterprises and digital entrepreneurs often rely on employees being equally committed to the big cause, whatever the social cause may be. And it's one of the, it's an open secret that people, some of these organizations have high attrition rates. So one of the interesting things we've talked about in the paper and something that we are observing in other projects I'm involved with is a very clear effort on the part of senior management to socially encode employees into the organizational ethos, into the social innovation aspect of the business. And that social encoding and its strength is going to be fundamental for some of the digital enterprises that I think it's going to be fundamental for most of the digital enterprises that we see now. And I think in a way, it resonates with what the literature might call professional socialization of employees. And the social encoding is perhaps a similar idea for the specific context of social innovations. One of the perhaps slightly counterintuitive angles to social innovators and to prosocial lending and the fight against poverty probably is the transparency of operations. Most organizations believe that too much transparency is not a good thing. But what we are seeing here is in a crowded digital terrain, being extra transparent actually could be a tremendous source of competitive advantage. Whilst a lot of effort is needed to deliver the level of transparency that an organization like Runday is delivering, we see that it could offer a competitive advantage. And when we talk of competitive advantage with organizations like this, I think it's important to remember that for investors, we are not looking at return on investments that are double digit. And as the organization moves towards becoming a more for-profit oriented enterprise, we might start looking at double-digit returns. But then there's the question of what happens to the social orientation, and is it are the interest rates competitive enough? So, given these thoughts, I think we felt that transparency could be a significant source of competitive advantage, but also the other thing that I was saying, which I forgot for a moment, is the question of how an organization in this kind of a setup can manage the trade-offs between what is obviously a socially focused organization and the diversification potential. So if we start looking at diversifying an organization with a pro-social focus, and if it has to become a more traditional lender, like the lending clubs of the world, or Zopas of the world, then it is possible to generate double-digit returns for investors, but that might take the organization away from its social orientation. So there are always trade-offs in the process of scaling and sustaining such organizations. And what we are suggesting is there probably needs to be a framework of ethical principles that will tell us how to manage these trade-offs, that will tell organizations and digital entrepreneurs how to manage the trade-offs between diversification and social orientation. And the diversification can pretty obviously help organizations improve the commercial focus and the commercial prospects, but there is a very distinct possibility that it comes at the cost of the grander fight against poverty, if you will. And of course, the typical questions that we get is the question I asked a few minutes ago about breadth and depth. Would it be better for organizations to not have a social orientation at all, but just focus on reaching a very large proportion of the population, just focus on reaching a very large consumer base? If you increase the amount of borrowers, can you assume, without worrying about whether the borrowers are really poor or not, that anyway you are doing social good? Do you actually have to go to great lengths to claim that you're a socially focused organization, a socially focused lender? Should you even worry about it? Or should you just focus on coming out with innovative financial products at competitive rates? So those are interesting discussions, and I don't think we have time for that today. I'll just quickly end by talking about what can go wrong with models like this. And I've alluded to some of this earlier. One of the criticisms of models like this, and which is a really good and fair criticism, is that there is a risk that the intermediary organizations that the platform works with can become somewhat, can take the shape of a glorified loan repayment collection agency, and which could mean that control might actually rest with the loan repayment agents or the intermediaries rather than with the borrowers. And so in many cases, if platforms are not aware of what is happening at the ground level, borrowers could end up being at the mercy of these intermediary organizations, and it might lead to the opposite outcome of what was intended. So we might end up with exploitation rather than empowerment. And some of the critical literature has talked about things like everyday humanitarianism and financial clickativism. So these are very nice ideas which says that some of these digital models actually end up just offering simplistic solutions to what is a very complex global problem. And it also leads to a feel-good environment, which is problematic, that you can just, with a few clicks on the computer, sit and solve and come up with a long-term solution of creating sustainable livelihood. So these are very valid criticisms. And of course, one of the criticisms that's been there for quite a long time about digital innovatives is that they invade the privacy and actually strip the poor of all dignity by putting their life stories on the internet for wider consumption. And this is problematic. Despite these problems, our own and my own sense of a project like this, and having worked with the organization and understood their activities, is that they have been very successful in reaching pockets of marginalized communities who otherwise would have found it very, very hard to access capital. So to some extent, initiatives like this are much needed, and the innovations have worked. And an interesting thought is the question of what do regulators do? And if regulators start looking at prosocial platforms as typical commercial lenders, there may be regulatory overreach to try and make sure that there isn't too much exposure for both on the lending side and on the borrowing side. So to protect both lenders and borrowers, there may be regulatory overreach, which stops lenders from putting in more than, say, £10,000 into digital platforms, or equally, they might stop borrowers from borrowing. So these are some of this is the flip side of the equation and things that could go wrong. And I will stop there, and I'm very happy to take any questions and comments. Thank you.
That's super. Thanks very much indeed, Ravi. I'm going to pause the recording now so people don't feel constrained.